Also following this breaking news this morning, the Department of Labor says there were 229,000 initial claims for unemployment last week. That figure is seasonally adjusted and is 3,000 less than the week before.
It comes after the Federal Reserve announced its biggest interest rate hike since 1994. The bank hopes the move will fight inflation. In just a moment, we're going to be asking Jill Schlesinger how the hike will impact average Americans. But first, Nancy Cordes is at the White House with how the Biden administration is responding to the Fed's move.
The White House is happy for the Fed to be the focus of inflation talk for a change, because that's a spotlight that they live with here every day. And they know that some of the gyrations that we've seen recently in the markets have to do with the fact that Wall Street is worried that the Fed actually didn't act quickly enough or aggressively enough to stem rising prices. And once those worries set in, it's hard to change minds. You know, in poll after poll, we see Americans listing the economy or inflation as their number one concern heading into November's elections. And that's why when President Biden is out on the road these days, he doesn't sugarcoat it. He doesn't say we're turning a corner, because there's a concern here that he would look out of touch with the reality that many Americans are facing. So he's very forthright about the pain people are enduring. He blames Russia, he blames the oil companies or COVID, and he argues that he's got a plan to address it. But the reality is, and many advisors here won't say it publicly, the reality is that they've just about exhausted all the things that they can do from here to bring down prices. I mean, they've tapped the Strategic Petroleum Reserve, 1 million barrels a day. They've loosened ethanol restrictions. They've convened the major retailers and manufacturers to try to smooth out supply chain issues. There just isn't that much more that the president can do. And so that is the central challenge for this White House right now, how to show that they are not just focused on this issue, but that they're actually making progress when their toolkit is limited. Vlad, Anne-Marie?
All right, Nancy, thank you very much. So as promised, more on this rate hike. We're going to bring in CBS News business analyst Jill Schlesinger. Thank you so much. Good. I'm so glad you're here. I know you're a woman in demand. We all need answers right now. And I think the first question that everyone wants to know is, how will this rate hike impact us immediately? Not the trickle-down effect, but right away.
Well, right away, if you're carrying debt that's tied to short-term interest rates, you're going to feel the pain. So if you have a credit card balance, if you've got an adjustable rate loan, a lot of small businesses have lines of credit through banks that those move around quite a bit. If you're going to buy a new car, that auto loan may cost a little bit more. So that's where you're going to feel it immediately. Savers might get a teeny tiny bit more. I was just responding to a question recently, and they said, well, why is it that on the way up, the credit card companies charge more immediately, but the banks don't actually raise rates as quickly? It's kind of because the banks absorb a lot of costs and they don't use those savings accounts as almost pass-through vehicles. So you are getting paid more. It's just not a lot more.
No.
So it's interesting, and we've got a question here. How long will it be before we see prices start to go down? And I've watched reporters across various networks ask analysts, ask economists, ask people who are representative of the Biden administration, who are economists, to pinpoint this. And I know that people want definitive answers, but we don't have them. As a former guy who worked in your industry, Jill, it pains me when people ask for these quick fix questions and answers, because there are no easy answers. But given the measures that the Fed is implementing, what will we see, hopefully, in the short term?
Well, I think in the short term, when you have the cost of borrowing rise, there will be a change in behavior. And it's actually happening already. And I think the best example of that is in the housing market. Now, the Fed does not control rates that are tied to long-term mortgages, but all rates have been rising over the past 6 months. So if you look at the housing market, where it was explosive growth, let's say from the summer of 2020 right through the end of last year.
In terms of the cost of housing.
Cost of housing and activity. Both of those things were just crazy. Now we're starting to see activity moderate. Now we're seeing applications for new mortgages start to drop. We are seeing housing activity moderate. And interestingly, that could be sort of a leading indicator of where we think the economy is going. Because if housing activity is moderating, if prices are leveling off, and maybe even dropping in certain markets, that could be seen as a way to kind of portend what's happening for everything else. We are not going to see energy drop quickly. We're not going to see food drop quickly. But in general, if the combination of our own behavior, meaning, hey, I don't have a lot of money to spend elsewhere in the economy, and higher interest rates starts to damp down demand, that is one side of the equation. We can't really control supply with interest rates, or the Fed can't, but we can see that side of the equation of demand start to moderate.
Mm-hmm. But aren't there like other factors impacting inflation, though, that it's not about, oh, people are making more money, so they're spending more, so we have inflation. It's about all these other influences, the war, the price of gas, China shutting down cities here and there. Can moving the interest rate have an impact on any of that stuff?
Well, we don't know. So let me just be clear. To your point, Vlad, we don't know. So, we're asking individuals, Federal Reserve officials, to be prescient. And sometimes they do it pretty well, sometimes they don't. There's a reason why they call economics the dismal science. And my friends who are mathematicians don't think that economics is a science, because there are no clear questions.
Right,
they really don't. So what I think is kind of difficult is not just that we have these supply constraints, and not that we have these rolling lockdowns, say, in Asia, but we have an emotional part of this economy that is almost impossible to measure. Because there was this pent-up demand that we had sitting at home. All of us felt this. I know it. We sat home and we said, oh, my God, I want to spend money. This is awful. And that demand was unleashed in a way that I don't think many people could have predicted. A boring certified financial planner like me sits around and says, oh, my God, the savings rate is really high. That's great. People will have savings forever. No, they plow through their savings, and now they're going to be looking at a point where they say, I have no more savings, so I'm going to have to stop spending, or I'm going to borrow. But if I borrow, it's going to cost more. So, I think that we are in this unique period coming out of COVID where it's almost impossible to predict what behavior will be.
Yeah.
So we mentioned off the top that the weekly unemployment numbers came out this morning. There were 3,000 fewer claims this week, which is, of course, an improvement. But what effect would this rate hike have on the job market? If you are, we've talked to small business owners, mid-sized business owners who say they were looking to hire people. This was before this rate hike. What does it mean now?
Well, it depends the industry you're in. We have some evidence that technology, which has been in a bear market since the beginning of the year, essentially, technology stocks have lost about a third of their value overall, that a lot of those companies have pulled back. Some have rescinded offers that went out. I think that if you're in an industry where demand remains high, you'll continue to hire. That said, I think there's also a point where there are some people who've been looking for jobs and have been excited about, like, oh, I have the leverage, workers have the leverage. Be careful. Because if the economy were to slow down, and if we were to actually see an actual recession, you don't have that power anymore. So before you start getting on your high horse and saying, I demand a raise, I think what would be really good is to consider what are the things that are important to me. Is stability of working for a company that's really going to stay in business important? Anecdotally, I know a lot of Wall Street firms who've seen a bunch of their employees poached by crypto firms.
Wow.
And guess what happened? All of a sudden, they're getting their phones are ringing again and saying, I don't feel comfortable here. Can I come back? And I think a lot of those companies are, in the old days would have been saying, no way. And now they're saying, sure, come back. We love you. You're a great employee. So when you're taking risk in your career, just know the economic environment under which you're working. And if you're a business owner, just be careful, because you don't want to bring on a whole bunch of people and then 6 months from now feel like, oh, my gosh, I got to let half of them go. So I think it's important to be clear-eyed. And as any former trader would tell you, and I was a silver trader in my first job, that if you're looking at the environment, you look at your best case scenario, but you also look at your worst case scenario, and hopefully it'll be something in between. But if that worst case scenario were to go into in effect, what would you do? That's what I would be thinking about if I were a small business owner or a medium-sized business owner. And that's what I think about for an individual. If things are great, fantastic. I don't have to worry. If things are rotten, now what am I going to do? Right. Where is my emergency reserve fund? Have I paid down that debt that I can pay down? Have I eaten into my savings and now I really need to replenish it? These are the questions you ask. Everyone needs a plan B.
But Jill did say to us
advice.
earlier this week, part of the advice that she gave us earlier and our audience earlier this week is if you have a plan and you haven't had any big life-changing events, right? You haven't gotten married or had a baby or getting ready to send a kid off to school. If the plan hasn't changed and the plan was always, hey, I want to have enough money to live when I retire, if that's, for example, a plan, you should stick to that plan.
Absolutely. But, it's funny. I was hosting my podcast and I get a listener call. We do these calls every single day. And this guy said, I want to retire. And I literally did a back of the envelope financial plan for this guy. And it was hysterical because I said, you can't do it. And he said, really, I can't? I said, no, you can't retire when you're 56. And you're going to have to work until you're 62. Or you have to decide you'll spend less money. Because there's only so many parts of the equation that, at least in this mathematical equation, it's very clear. You know how much money you make today. You know how much money you spend today. If you say, I want to spend the exact same amount of money in my retirement, then you also know that that money has to last you decades in the future. So that's why it's funny when I get calls from people and they're freaking out about their portfolios. I say, well, look, you can be freaking out all you want, but be clear, you don't need all of your money tomorrow. You need all of your money to last you for decades in the future. You retire when you're 57, you're going to have 40 years.
Or even 40.
40 years of retirement funds. Come on. So you really need to think that through and be clear about one thing. Everyone's all freaked out and they're worried today. The best antidote to that is to keep working.
Yeah, that's what I plan on doing.
Me too.
I mean, do you know anybody who's retired at 55? I don't know.
No,
yeah,
remember, Freedom 55. It's a dream. It's a dream. Jill, thank you very much.
Just getting started.